Markets podcast. It is March the 1st already. Who would have thought? I'm delighted today to be joined by two of our regular guests, Daniel Rahmat, Senior Energy Security Consultant, and Osama Rizvi, Energy and Economic Analyst, Primary Vision Network. And we're very happy to welcome for the first time on the program, Mr. Max Torres, Managing Partner at Plata Energy, based in Houston. Thanks so much, gentlemen, for joining us.
Pleasure to me.
It's a pleasure to be here. Thank you. Thank you for the invitation.
Great to have you. Let's start, Daniel, with you today, perhaps, and talk a little bit about OPEC and just general supply conditions. We have a couple of things on our bulletin this morning, which reference that Nigeria production is kind of back a bit on track than it was. We have been hearing a lot of anecdotes of Libya production, coming back. We'll talk about the South American, Latin American angle soon as well. So there doesn't seem to be too much sort of panic about supply anymore in terms of tightness. We've had this demand supply kind of yo-yo for the last year, pulling market prices. Where do you think we're at in terms of OPEC supply?
There are points we need to consider regarding the production side and the consumption side. Of course, the balance between production and consumption is the case we need to consider. Well, production side, if you want to focus on, we don't have serious problems. As you said, many countries are increasing production, but at the same time, Russians have already threatened to cut 500,000 barrels per day, and we're not yet sure whether they're going to cut the crude supply to the market or the refined production supply. And I think if they cut some amount of some huge amount, that would be a shock to the market. At the same time, countries like Iran, as you said, Nigeria, the others are increasing production, and maybe they could somehow offset that remarkable Russian cuts. But actually, maybe they can offset those barrels. But there are other sources of concern you still have. For example, the Saudi Arabia's new huge power generation facility there, which is going to generate 3,000, 5,000 megawatts of electricity from oil products directly. That's a sort of huge, gigantic power plant in southern Saudi Arabia is going to consume a lot of barrels every day. So we are not sure where the supply is exactly going. At the same time, considering the geopolitical crisis in East Europe is not yet finished, and Russians can easily cut the Kazakhstan oil, which is going through to the Black Sea through the Russian territories, about 1 million barrels per day. You can see that the threat is still existing to the market. So the market sentiments can easily come back to what they used to be in the last year. So I'm not sure whether we are absolutely in the safe side now.
Yeah, not quite out of the woods on the supply side. Although, as you say, I think the market from a price point of view has sort of factored in that Russia cut, if you like. Though I know that they announced it officially 2 weeks ago, they're cutting 500,000. But it has been since the end of last year that the speculation that we're going to probably lose up to about 1 million barrels a day of Russian oil, and that's probably already factored into prices. But yeah, I mean, it is a vulnerable situation. And then we've got, of course, the demand side, which we were not going to delve too much on demand today. I'd rather talk about supply. But Osama, let me go to you as well in terms of Pakistan's situation, clearly suffering financially, economically, still trying to finalize its IMF rescue deal. But from an energy price point of view, yes, those prices have sort of stabilized, but they're still pretty high for you, aren't they, in terms of what Pakistan can afford? And I heard you chat earlier to Daniel about the gas situation and Iranian gas to Pakistan. Let's look a little bit at that perhaps and go back to Daniel on that later. How confident is Pakistan that it can get the gas it needs this year and at an affordable price?
No, so just to start off, recently, about 5 days ago or last week, I believe, the gas prices in Pakistan, natural gas prices in Pakistan, was increased 122% in one day overnight, right? So that just shows how dire the situation is regarding the energy here. So the domestic gas production in Pakistan has been falling since the 1990s, and now it isn't enough to meet the needs. So we have to import gas. We also make about 66% of our electricity from oil and gas, and about half of it is imported. So that shows how Pakistan is exposed to the international vicissitudes of prices, of energy prices, and that is where the Russian and Iranian gas comes into play. But as I was saying earlier, there's a lot of political baggage to it. There's a lot of moving pieces, lots of variables that go beyond the realm of economics and energy that needs to be addressed in order to have these projects conclude successfully. So Pakistan has been trying to get Russian oil. We discussed this here in this podcast as well. But I don't believe it will happen because of many reasons. We are, as you said, we are trying to get IMF plan. That won't sit well with IMF, of course. That's the US dimension of it. IMF is already quite wary of the fact that we might pay our Chinese debt back from the money they are giving us. So now you add in the Russian oil and gas, and it doesn't sit well, doesn't fit the equation. So what I'm looking at is that, and I've said this before, that for Pakistan, the energy supplies will remain a huge issue. In the summers, I'm looking at an unprecedented amount of blackouts, what is called load shedding in Pakistan. Pakistan recently was not able to secure its cargo for February by, so ENI and Pakistan has a long-term contract, but they somehow couldn't sell us the cargo. And this has been going on for the past 3 or 4 months. And we have been buying gas cargoes on spot prices, which naturally puts a big dent in the foreign exchange reserves. And all of this ties down very neatly with what is happening here in Pakistan in terms of an economic meltdown. We're trying to get an IMF deal. Prices are rising. So I see that the purchasing power of the consumers are going to be affected. The industrial production has already been affected. It will continue to happen. And energy supplies and energy provision will continue to remain a challenge. And we will see some unprecedented amount of energy bills, and households are about to literally get shocked when they receive their electricity bill. That's what I'm looking at.
122% daily rise in a gas price is a bit of a shock. But you mentioned the LNG spot cargoes as well, which I wanted to ask you about. But you mentioned that, of course, that's something Pakistan's been trying to do, and perhaps that protects it a bit, at least from the geopolitical pipelines, Russian pipeline gas that it is, and indeed Iranian pipeline gas. Max Torres, welcome again. Let's get a point of view from Latin America. Let's start with a bigger picture question for you in terms of, investment into the Latin American E&P space. Clearly, investment generally globally is hesitant because of many reasons. One of which is that, oil prices are quite volatile, and the whole system and industry is in a bit of flux right now. So give us a picture of today where the E&P trends are in Latin America. Where would you say we can pin the sort of newest supply to come from in the immediate future?
Okay, thank you, Diana, for the invitation again. Latin America, as you know, is going, against the current again. Production is declining. Right now, production is near 6 million barrels of oil per day, and it's been declining the last 5 years. The only country that is increasing production is Brazil. Brazil has a tremendous successful story behind the pre-salt play, offshore pre-salt play. So Brazil is king in Latin America, but all the other countries, especially Mexico, is showing a tremendous and rapid decline in production. And going back to your question, I think the main reason for this decline is a lack of investment. And what is behind the lack of investment is, the lack of reliability of legal frameworks, reliable contracts, and this goes back to the political signature of most of the governments in Latin America. Unfortunately, most of them, they are going, to more nationalistic, protective, mode, and unfortunately, this is making all the investors and the companies in general wary to invest in Latin America, not only in drilling but in infrastructure and long-term plans. As we all know, oil and gas industry requires a minimum of 10, 15 years of a reliable and stable contract in order to recover the investments. So unfortunately, Latin America is not showing any signs of improvement as far as production. As I said, production is declining. And
what about Venezuela? I mean, you mentioned Brazil as a success story, Mexico, no, yeah. Venezuela, we know its challenges obviously because of sanctions and internal politics as well. There was a bit of a sort of breath of hope, if you like, last year when the US was trying to kind of bring prices down and encourage all sorts of production from wherever it can. And there was, a bit of talk around letting Chevron and various companies perhaps, extending licenses there, etc. Any hope there, or is, as you said, will the same factors, which is internal politics, kind of always stymie any ease of sanctions? Should we get those?
Yeah, thank you for the question. I think the elephant in the room is Venezuela. Venezuela supposedly has 300 billion barrels of proven reserves. They're not 300 million, but there's probably 60 billion, which is a huge number anyway, compared to Middle East, which is near 150 billion barrels of proven reserves. So it's a very big number. Brazil is around 15 billion barrels. So Venezuela could be the success card of Latin America. Unfortunately, again, due to politics and sanctions and the wrong decisions in the last 20 years, from the government, left government from Mr. Chavez and then Mr. Maduro. Unfortunately, production has declined rapidly, and right now is in a very low number, close to 500,000 barrels of oil per day. So. Going back to your point, I think the ease of sanctions. Well, first of all, there was the war and the disruption of supply, Europe and everything that we already know and discussed. U.S. obviously needs some kind of reliable partner in order to get supplies. So that reliable partner could be Venezuela, okay? But Venezuela obviously needs to change. So the U.S. has approved Chevron and other companies for a short period of time, to ease sanctions, about 3-4 years, so they can, discuss new contracts, recover some of the debt that the government had with them, and hopefully, set ground for new projects. They have also approved a project called Dragon, which is a gas field in the border between Trinidad and Tobago and Venezuela. And they have approved the Trinidadian government to be operators in that gas field. And that's been approved about 2 or 3 weeks ago. So that's another good sign that the U.S. is willing to signal ease of sanctions to Venezuela in order to get the much needed investment in order to increase the production. But again, production has declined, right now it's in a ridiculous number, as I said, 500,000 barrels of oil per day. So Venezuela is the wild card and the hope for Latin America. Let's hope that things are going to change.
Yeah, okay, and we'll come back to a couple more plays there possibly that are interesting. Osama, back to you. You mentioned Pakistan's current economic issues, debt, inflation, gas prices, not being able to get oil supplies even from certain countries because of geopolitics. I mean, it seems to be stuck basically. What would you say is the magic solution, if you like, and it's something that's viable? What's the next step that needs to happen? Is it the political system internally in Pakistan that has to make some major policy changes to attract IMF rescue package? What is the next step, and how soon can we expect this IMF negotiation to kind of, progress, if you like, so that all these other puzzle.
I mean, recently the changes, the gas prices, the petrol prices, the electricity prices, the winding down of subsidies, and all those things. It shows that we are, clearing the ground for the IMF program to arrive. And I believe in a matter of maximum 2 weeks, I think we should get the tranche of $1.1 billion. But that will not be, I will not even call it a fix. So to the level to which we have messed up, I believe there is no quick fix to this. On a timeline, there only needs to be medium-term and long-term solution. There is no short-term solution. Getting IMF for this year, and I believe certainly we would be going for another IMF program next year, that might be categorized as a short-term solution. But until or unless we address the structural issues, the underlying issues, all of these things, these are symptoms. These are symptoms, and we try to manage these symptoms. But until or unless the structural issues, the root causes are resolved, which is productivity, which is agricultural yields, improving agricultural yield, which is working on the energy security, which is working on the energy storage, which is improving the way we hedge or form our contracts, long-term contracts with international firms and suppliers, which includes rehashing or revamping the whole infrastructure. Until unless these issues are resolved, I'm not for the short-term solutions. IMF, yes, might be getting more, close to Qatar, can be another solution. We need to hedge. We can't only rely on Saudi Arabia. Qatar needs to be brought in as well. Similarly, needs to get more, even closer to China in terms of, because China didn't help us until unless IMF endorsed us. So that needs to be changed. China should trust us this much that they should be able to park the money even before IMF endorses us. So these might be a few measures, but other than that, what I've just told, they need to be it. Until unless that happens, we continue going to the.
Let me ask you then the question: the structural changes you're talking about seem to be policy changes.
Yes.
And how does the current sort of administration sit in Pakistan? Its approach to those things. What's stopping those things from progressing?
One of the biggest dilemma here, and in many developing countries, and now we can also see this rising in the developed part of the world as well, is the short-termism in policymaking, right? So the short-termism in policymaking and the focus on only securing one's political capital, that leads to what we call popular measures, right? And those popular measures are the root cause of what is happening, and that is also the root cause of the criminal procrastination, I would say, of the implementation of the changes that I've just spoken about. So I think, I don't know, there needs to be a new generation of politicians, and for that we'll have to wait about 2 or 3 decades for that to happen. And then their priorities need to change. They need to, they need to take some unpopular measures that would really set the direction in the way that I'm talking about. Other than that, right now, the current administration, before that, after it, they will only be concerned to secure their political capital, unfortunately.
And that probably means subsidizing things like energy prices and keeping, of course, trying to avoid social unrest. Daniel, back to you. Let's talk a little bit about Iran, but in the context of not so much its production, which is what it is, and it's still exporting certain amounts. But again, let's give us an update on the internal situation. We don't seem to be seeing, at least on the international news, as much update, if you like, on the protests there. Again, the JCPOA deal has sort of gone to sleep for the time being until such a time as Iran perhaps changes its approach to the domestic order there. So where are we with that? And do you see the JCPOA nuclear deal coming back to life in the first half of this year? Clearly, it's in the interest of the West that they want to keep engaging Iran on that front in terms of controlling its nuclear capability.
Yeah. First of all, let me tell you something. Iranian crude exports, especially in the 4Q 2022, increased very significantly, and the exports somehow reached 1.3 million barrels per day, and simultaneously Iran increased its refined products exports to Asia mostly, and based on some information how it was something about 800,000 barrels per day. So that shows Iranians oil and condensate, refined products exports has reached a very remarkable level. Still much lower than what it used to be before the sanctions, but it's a record. So I think we need to consider that Iran is now earning remarkable and considerable amount of money, especially from China.
Oh, I've lost Daniel. Anyone else? Yeah.
Yes, he seems
He's
to be
frozen.
yeah, frozen.
Come back and
It's frozen, yep.
Just when he was telling us about China, which is really interesting. He'll come back, I'm sure. Let me go to Max until Daniel comes back. Let's talk a bit about, I mean, any other, you talked about Venezuela as the elephant in the room, great potential, but unfortunately not being able to sort of produce for those reasons that you mentioned. What about Guyana, another area which has had, new investment go into it recently? How soon, how hopeful an asset will that be to adding to sort of Latin American production?
Yes, indeed. Indeed, the emergent play in Latin America has been Guyana and Suriname. Since 2015, they have added something, a staggering number of close to 12 billion barrels of oil, mainly due to Exxon discoveries, in a block called Stabroek. So this fantastic success story is also good since contract and environment, for investment is favorable. So obviously, right now they have very little production. These are very new discoveries, so they need to start ramping up production. But I think Guyana in very soon, very little time, will have something close to 1.5 million barrels of oil per day, which is very important, for a country like this. But again, this is an emergent area, Guyana, Suriname. Also, there are a few discoveries in Suriname, smaller but also significant. This Apache Corporation, drilling in Suriname. So yes, Guyana, Suriname, very promising, very nice discoveries, very nice volumes, very good well delivery. But obviously, it needs the investment, to ramp up production. But everything is showing that it will happen. I think Guyana is going to be one of the major producers in Latin America in 3, 4, 5 years. Yeah.
Perhaps politically, it has its house in order a bit more than other countries. Just while we have you on the show, Max, give us a little brief on the whole energy transition outlook for Latin America as well. The world is on a transition of sorts. Different pace, different regions, perhaps. Energy security has kind of taken a front seat in the last year, but where is the investment of that going into Latin America, or is it just too distracted by trying to keep its conventional industry going?
No, surprisingly, the transition is moving ahead rapidly in Latin America, which, in my personal opinion, is a mistake. But the transition is moving very rapidly, and is detrimental to the conventional oil and gas production. And most of the countries get a lot of revenue from conventional oil and gas. So in my perception and in my view, I think it's the wrong move, to accelerate transition in a region that doesn't need a transition, because basically the emissions in Latin America are very low. About 4% of the total emission globally is coming. 4% is coming from Latin America, so basically not significant. And essentially, the energy matrix in Latin America is clean compared to other regions, and mainly due to hydropower, hydroelectric generation, from dams and rivers. So about 30% of the energy matrix in Latin America is clean energy, compared to the rest of the world, which is about 10 or 15. So
just ahead.
yeah, so Latin America in the transition is ahead for different reasons. Also, the governments are pushing the transition wrongly, in my view. Like countries like Colombia, for example, they are making a big push. They are canceling oil and gas contracts, or they are not signing new contracts, to transition into what they call, clean energy matrix, where they definitely don't need it. But to your question, transition in Latin America is moving ahead. It's moving ahead rapidly. Most of the countries have taken this as a central task. And basically, if you compare Latin America to the rest of the world, Latin America has very, very low impact on emissions, because obviously it's a very undeveloped, underpopulated region.
Okay, great. Thank
Yep,
you, Max.
yep,
That's Rich,
yep.
good to have that perspective. Daniel, welcome back. We lost you. You froze when you were just about to tell us about China. And you were talking about Iranian exports, Iranian production, and China. So do carry on with your point.
Right. So sorry for this connection.
Yeah, it's okay.
This is because of the internet disruptions here. Anyway, as I told you, Iran is increasing its exports to Asia, mostly to China, to Asia. And so Iran's earning from the oil revenue has increased significantly. But Iranian government, the current Raisi government and the previous Rouhani government have significantly increased during the last 2-3 years the monetary base in this country, and we are facing dramatic and shocking inflation rates here. The Iranian currency is falling, is declining. The value I cannot say it was unprecedented. We had some such experiences before, but the frequency of declining the Iranian real's value is very interesting. When Trump actually withdrew from JCPOA, the Iranian the exchange rate for Iranian real to the United States was 30,000. Let's say we have two types of currencies: 3,000 tomans, which is 30,000, which is 30,000 reals for $1. But now it is about 600,000 reals for $1. You see, it is a very huge, actually, economic fall down in this country, and despite the increase in the oil revenues and also somehow the gas and gas condensate and oil products and petrochemical products revenue, Iranian economy is falling down. Whenever you hear,
well, it's not, and it is, of course, and Iran is under sanctions, Venezuela is under sanctions. Pakistan isn't really under sanctions, but I mean, all the emerging economies are suffering from this debt issue, from inflation, like the rest of the world at the moment. It's not, I mean, relatively speaking, it's high compared to the last few years in the West, but a lot of inflationary problems. Daniel, Max, while we have you on, as I said today, let's just talk a little bit about that, obviously, in terms of debt, a challenge to Western and emerging economies as well, and Eastern economies. Where does Latin America stand today in terms of any ripple impact it's getting on the inflationary front, what we're seeing across the world from its currency, obviously exchange rates, with the US dollar getting stronger? Is that weighing heavily on decisions?
I think that's a mix. There are some countries with very high inflation, like Argentina or Venezuela, and the other countries that very stable, like Peru or Paraguay, Uruguay. They're very, very stable as far as currency and exchange rate with the dollar. Colombia recently seen a climbing in rate of inflation. But in general, I think Latin America, especially Brazil, they are sort of stabilize as far as inflationary pressures. But as you mentioned, there is the huge problem of debt. I think most of the countries, they have a burden on debt, especially with Chinese and European banks. So that is going to be something, there's going to be a compromise for the future development of Latin America. But again, so far, inflation is a mix. There are some countries that are doing very well and some others that are doing very poorly, like Argentina and Venezuela. I think Argentina and Venezuela are a couple of the worst economies in the world.
Okay, well, thank you. I mean, the only positive thing for emerging economies is that now today, people are saying if there's any investment to go in, invest in the East, invest in Latin America. Emerging economies, do not put your money into Western economies anymore. That's one sort of, I suppose, perhaps saving grace of good investment to go in. Well, we've run out of time, gentlemen. We had our poll question up earlier that I didn't mention, but it was asking, and we got a few votes on that. What would be the bigger pull, if you like, this year on oil prices? China usually is the pull, but given we didn't talk much about China today, but given the mixed reviews of how strong that demand is so far in terms of recovery, is India providing a bigger pull? India is looking to a 15% growth in GDP, but we still got 77% of our audience saying China will be the bigger determinant, obviously, in terms of total volume still. Thank you so much, gentlemen, for joining us this morning. Max Torres, Osama Rizvi, Daniel Rahmat, thank you so much for being on the Daily Energy Markets podcast. We just have an interview coming up that's going to be aired in an hour, 12 p.m. UAE time. A very good, actually, conversation with Tony Foster on the maritime situation, shipping, and how the war has disrupted, the Ukraine war has disrupted that, and all the new trade flows and energy that we're seeing that many are saying are now going to be permanent fixtures. So encourage you to watch that and tune into that. Thanks so much, everyone. And
Thank
have a
you.
good day.
Thank you.
Thank you.
Diana. Thank you very much.
Pleasure again.
Bye-bye.
Thank you. Bye-bye. Have a good day.
Bye. Thank you.